Magnificent Seven stocks on a tear this week with several names hitting all-time highs. With us to discuss what's behind this record rally, we've got our own Josh Schafer here. All right, Josh, what's going on here? It just seems like seven names continuing to make up more share of the S&P 500.
Yeah, we're back to the 2023 playbook, right? Not actually, but we're talking about seven stocks leading the equity market higher. Should we all be nervous about this? What is going on, right? So I posed that question to a couple strategists this week, and there's really a couple factors at play. The first one I would point to, guys, is think about the macro narratives we've been talking about over this past week. We've been talking about the potential for higher for longer from the Fed, maybe higher inflation. Well, what's worked in that playbook over the last 18 months in a period of high inflation, in a period of higher yields? You look at the 10-year yields at its highest level in about 3 weeks now. It's risen about 20 basis points through December. We've been talking about a Mag 7 rally through December. Part of what a lot of strategists recommend in a period like this is I want to go up in quality, up in cap spectrum, right? I want to go for large cap companies that have a lot of cash flow that actually could benefit from higher rates, and tech has benefited from higher rates. So you're seeing flows into it from that perspective. There's, of course, we talk about them as a group. There's individual stories going on here, right? Tesla certainly has a lot going on with its different car announcements that are coming out, with Elon Musk tied to Donald Trump. All of that sort of driving that part of the stock. You have the quantum chip coming out with Google and Alphabet. That's sort of driving its own narrative. But the other thing I would argue when you talk about just the fundamental case for these stocks, right? We talk a lot about that chart, the 493 versus the S&P 500 or versus the Mag 7, right? There's this chart that we always talk about where the 493 are supposed to pick up in 2025. Earnings growth is supposed to pick up, and the Mag 7 is supposed to see earnings growth decline. Well, when you actually look at estimates and where estimates are moving, the revisions for the current quarter, Mag 7's holding up better than the S&P 500. Mag 7's holding up better than the 493. So right now, if it's a show me story from a fundamental standpoint, Mag 7 earnings are holding up better than everyone else. And if earnings are one of our key drivers of stock price performance, it's not hard to understand why, okay, there's still some strength there, and we kind of have to wait to actually see the weakness and maybe even more so see the strength from these 493. Right now, we're talking about estimates, not necessarily what's happening.
Exactly, and I think that's key, right? If you're there trying to figure out just how, whether or not this momentum that we have seen, at least as of late here, can really be sustained. I guess my question is, when you take a step back and talk about the risk profile then of the market, just how investors should be viewing this fact, the fact that there is so much uncertainty, the fact that there is so much riding on what exactly the earnings results are going to tell us specifically from just a handful of companies. Is there at all just sort of a reevaluation going on just in terms of maybe the volatility that we could see, or maybe further rotation that we could see then in the latter half of next year? Maybe?
Yeah, so part of the reason we talk about how many stocks are going up and how many stocks are going down is because people would tell you that's a sign of strength in a rally, right? A sign of strength in the bear market. So the S&P 500 has had more decliners than advancers for 9 straight days now. That's the first time that's happened since 2001. And essentially what the argument would be is it puts the rally on a little bit thinner ice. You have less support from all of these other stocks if, say, what if bad news comes out of, I don't know, I don't want to say bad news about any of these companies, but what if bad news comes out of China and it hurts NVIDIA, right? We've seen that happen plenty of times. And so then NVIDIA falls, and NVIDIA's been one of your key drivers, then you're just on less solid footing. Mm-hmm. So I think it will be interesting to see specifically maybe once we get past next week's risk event with the Fed and we get a little bit more of a clear idea, potentially, of what they plan to do in 2025, can you get back to this broad rally then? Does the Fed feel confident in the economic trajectory then? Because I think it's also the economic story that's playing a big part of it, right? That's a big part of the 493, is it's a call that the US economy will continue to do well in 2025, and that rates will hopefully come down a little bit. And I think you're just seeing some uncertainty, and when we've seen uncertainty in the last year and a half and a little bit of uneasiness about where macro is gonna go, right, people hide in the Mag 7.
Yeah, you see that concentration. All right, Josh, great stuff, thanks.